As we mentioned, the trade news lifted the market today, but can you trust the rally? We're joined right now by Larry Adam, Chief Investment Officer at Raymond James. Larry, welcome. Nice to have you here.
Thanks for having me, Sue.
That is the question. I mean, investors have really been whipsawed with every headline on trade. How do you feel, broadly speaking, about the move that we saw in the market today and whether it's sustainable?
Well, I do think it's sustainable because I think by the end of this year, we'll be up at record highs, and I think that will continue into next year. But I think the biggest part of the story, as you just mentioned, is that investors need to have a plan. And if you think back just over the last couple of weeks, if you'd have gotten out at the wrong times when we were actually down because of the fears of a recession or fears of trade tensions, you wouldn't have experienced this most recent rally. So sticking to a plan is very important.
What should that plan include, though? I agree. You don't want to try and time this market and get out at the wrong time. However, what do you invest in? Lately, the defensive issues have been the strongest in this market. Clearly, people are looking for safety in this market, even as they look for long-term growth, right?
Well, that is true. And to look at what's happening tonight with the NFL and the 100-year celebration, I'm going to borrow a reference that offense tends to put fans in the seats, but defense wins championships. And if you look at our strategy, it tends to be a little bit more defensive, meaning that I like U.S. equities over international equities. I like large cap equities, which are the biggest companies in the United States, over small cap equities. And then in the fixed income market, I like investment grade bonds over the more risky high yield bonds. So that's how we're positioned right now.
And what about the Fed? What role, if any, do you think the Fed will play in this market?
I think the Fed will have a very important job in this market, meaning I think everybody wants to talk about whether or not it's one cut, two cuts, three cuts, or more. I think the more important story is, can they cut enough times for this expansion to continue? And I think that they will be able to do that, and that's why we're more bullish on the equity markets going forward.
You'll like the U.S. market, but what if we don't see a breakthrough in the trade talks in the next month or so? What if the tariffs do continue to go up and they hamper the growth rate of U.S. companies, especially those big, large caps that you like right now? Do you start to rethink it at some point?
We would start to reconsider that, because if you do see those tariffs go into their full amount, you're talking about earnings growth being driven down lower by about 6 or 7%. So you're right, that could have a meaningful impact. However, I still think that those tariffs are not going to be fully implemented. I think that they will be postponed. The president knows that it's very important to our economy for those to be postponed. So I just have a feeling that they're going to be put into next year, or at least postponed indefinitely, and that'll help the markets to rally.
Larry Adam with Raymond James. Larry, thank you very much.
Thank you.